N Jayakumar, MTN Group CEO at Prime Securities, joins us as well to discuss what's in store from here on. Jayakumar, good morning and welcome to NDTV Profit. This is Hiral on this side. With the kind of uptick that you're seeing in terms of markets, and you had FIs which actually came out and had a big sell number in terms of yesterday's session, what is the feeler that you're getting from here on? Is it going to be a DII-driven market? And if the FIs are exiting and booking profits, what would this mean?
I think a one-day sale figure can hardly be classified as a trend. And I personally don't think that a single-day sale figure is enough to conclude that the FIs are selling and booking profits. I think there have been sellers in the past, but over the last couple of weeks, I think there's been a decided shift with the dollar index coming off and the money moving out from the US markets. I definitely see an increasing trend of money coming through. There could be odd days when the FIs are sellers, much the same way the DIs could be sellers on a few days. But I think the trend that every dip will be bought into is something that I buy as of now.
I agree with that point, Tamanna here, and great to speak with you again. I'm just wondering if bond yields inching upwards is something which can be a bit of a pain point from an emerging markets perspective at all. And in terms of global turmoil and turbulence on the trade war front, do you think that that ship has now sailed, or could this as a factor come back and bite us?
With Trump, nothing has ever sailed. I think these things have a habit of popping up, and especially when you have a social media-driven policy formation process where everything is announced on Twitter and then we wait for clarifications later. Or for that matter, everything is done through executive orders with hardly any referral to Congress. I think it's a new world and it's a new way of doing things. But the way I see this is that at least as far as the trust factor in the US markets or the US government, more importantly, is concerned, that's certainly something that is a big overhang. I think people have started losing faith, and money flows have in a sense, presaged that and preambled that. And there's money coming out of the US markets, coming out of the bonds. Equity markets are holding up despite the fact that there will be earnings downgrades as inflation catches up. We've not had a single full quarter with the tariffs in place. And the tariffs are inflationary at the very least. I mean, 30% China may be a sort of a cotton wool kind of deal. But the reality is that at 30%, it's still a lot of pain point and pressure on the average US consumer. I believe that the Indian trade deal will get done over the next few weeks. We aren't used to these knee-jerk kind of have a cup of coffee in Switzerland and do a deal kind of process, which China seems to have taken up more, I would say, almost as if needing a deal to be done. I think the US needed it probably even more. But now that China has been set, and I think there'll be a reasonably fair deal done, I believe, with India. Keeping that in mind, but also the backdrop being that Trump's whimsicalities are legendary now. We will have uncertainties going along the way. But the reality is that the US consumer is now going to be hit and slammed down to the whole bunch of cost escalation, which is already happening. The likes of Walmart and Home Depot, etc., have already talked about it. My own sense is that that will be the pressure point that will make them relent. The downgrade in the US bond, the treasuries, is a matter of severe concern for them, as $36 to $37 trillion of debt is the outstanding, and interest rates are moving up. The long bond, the 30-year has gone or inching close to 5%. The 10-year has gone past 4.5% and kind of straddles that area. And these are levels that have not been seen, especially in what is seen as a recessionary and almost stagnation kind of environment domestically. So the US consumer is hurt. The US manufacturer has never made money. In fact, people have been moving out of the country to set up manufacturing facilities. So I'm not even sure what the current administration is in the US is smoking. I mean, these are completely alien to conventional thinking, and certainly makes no sense whatsoever. But be that as it may, we are in this maverick-led world, if you will. and certainly as far as the US is concerned.
This is what I love. Jakes doesn't pull his punches. But the fact is that we have to live with the outcome of whatever the US administration is smoking, as you put it. And in that sense, if there is an economic hit to the United States, IT and the resurgence we saw in IT then goes on the back burner. How do domestic investors who've kept the faith steady in Indian equity right now unpack all of these possibilities?
IT is an issue not necessarily because of US policies. I think it's a bigger issue because of AI. And that impact is playing out every quarter. Number two, the ability of the Indian IT sector to adapt to more products and more AI-driven solutions is probably the need of the hour. And that's easier said than done because these are all large service organizations. And most importantly, if you look at the domestic sector, India still being the oasis in terms of a growth in a desert of in a global desert, if you will. My own assessment is that the Indian growth story continues. Liquidity has never been as plentiful as it is right now. The RBI and the other should I say regulatory authorities are doing what it takes to improve ease of doing business. SEBI's come out with a lot of steps which I think will allow for greater access to foreign capital. But more importantly, RBI is very, very pro-banks, and therefore banking and financial services will lead, to my mind, the next rally. But from an international sector perspective, I think the pharmaceutical sector, which is the lowest cost producer in the world, other than China, will be hugely in demand as the US consumer seeks out pockets of low-cost production. Even today, Apple has made it very clear that notwithstanding what Trump may like or otherwise, they would like to continue production with India. And I think that goes, unabated. So if individual companies are taking steps which reduce their costs, India cannot be a point on the map which they ignore. We could argue whether they'd be as important as China was 10 years, 15 years ago, but you cannot argue for the fact that the Indian manufacturing setup is here to stay. We'll need to keep tweaking to make sure that things happen. But having said that, the world itself has moved on. The dollar index collapse, the yields going up, clearly indicates which way money is moving and which way international thinking is, geared towards.
Right. Jakes, one question I have when you mentioned about BFSI that will lead the rally. You have an IndusInd Bank that is going to report numbers today. And with everything that's happening across, the disclosures that they've made in terms of the discrepancies in the derivatives trading portfolio, the RBI coming in, and the latest that's come in where an additional accounting issue where the bank has found almost 674 odd crores worth incorrect interest income. And you have the earnings. How would you actually describe the entire episode? Do you think this is going to be a cleansing act from here on and a good investment opportunity, or do you think this is something one should be avoiding?
I would not like to talk individual stocks, but in general, just a one-liner which may be trite in some senses, which is banking at the end of the day is in a sense, a trust business. And any bank which faces this kind of a sort of barrage of events, clearly the trust factor starts weakening. So for me, it's an avoid, especially when the banking sector is replete with small and big players, all of whom are focused and doing the right stuff, especially with the tailwinds of liquidity, etc. The BFSI is a large space. We don't necessarily need to, hunt out gems from, in some sense, near-term fallen angels.
Okay, now the hunting out gems is the interesting bit. Are there gems in the market right now? Because the companies that are doing well, and we're seeing it from the corporate numbers, companies are doing well that have reported good numbers, and the question comes in of valuations. That balance is getting more and more difficult to strike. What are you making of the kind of numbers that we've seen so far?
I think markets will pay up for growth. And as I said, there are multiple companies that have reported very good numbers. And in 7,000 or 8,000 listed stocks, I'll be the first to say that there are more gems than you and I can count. The idea is that what will you pay for growth? And as growth becomes a huge challenge in most parts of the world, I think there are several small and mid-cap players who are giving the growth at, arguably not the cheapest of valuations, but then as companies become bigger, valuation multiples start becoming a part and parcel of what people have to pay up. But in the BFSI space specifically, I do believe that there are a number of good candidates in the private sector space that I would be buying. But as I said, I don't want to talk specific stocks, but our interest in the space is very, very high.
That's all right. What about defense? What you're seeing, I mean, of course, there's the recency bias with defense, but there seems to be much more to it than just, okay, there was a conflict and then people brought into defense stocks. What we saw with Operation Sindoor was the coming of age of Indian or indigenous defense technology. Are you buying into that defense story right now?
I think, defense very quickly has sort of moved up and become, on the face of it, quite expensive at this point in time. But is there a play with defense being potentially an export theme, where a number of smaller countries come to us to actually source equipment? Because I think if this war taught us anything, it is that indigenously made, armaments actually did extremely well and, helped us big time. So I think from that point of view, is there a space, and is it a longer term story than just being used in some conflict, and therefore the proof of concept being tested out to our satisfaction? So taking away the fact that, there is jingoism associated with some of this, but the reality is that most of these companies are priced to perfection as of today. Can this be a longer term story with a lower return than what they promised several years ago? Probably that's the way it's playing out. So wait for any sharp dip where these stocks come off 10-15%, and then that could be an entry point, because a lot of the returns have got front-loaded in defense stocks.
Right. So, Jakes, with all of this said and done, BFSI, that will lead the space. We've spoken about how pharma will do. Defense is what we've spoken about as well. From a market perspective, where are you looking at the new base from here on, taking into consideration the gyrations that we've already seen so far? What could be the new normal for Nifty 50?
Well, difficult to say new normal over what period of time, but let's say if we took the next 6 months. Clearly, the double testing of 21,000, 22,000 has become a very, very solid base. Even through the war and everything else, we did see those levels holding out. And then when the dust settled and money started coming in from, especially from, overseas markets in, and we saw the foreigners actually buying through this difficult period as well. To my mind, 23,000 to 23,500 perhaps will become some kind of a pretty solid base. And quite suddenly, we are now close to 25,000. But I would dare say that if you want a really solid, sustainable sort of thing, I think 21,900, 22,000 is that level. Intermediate-wise, I think maybe 23.5 would be the level. So we probably will, we should look at buying into this market on any dips, but avoid the sort of blowout days, the days when, Nifty goes up 1%, 1.5%. Those are probably not days to buy, because a reversion to mean, while it may not happen, but reversion to 2-day and 5-day-old levels could happen, because so many, as I said, policy statements are coming out through social media and in a sort of a whimsical kind of manner. And those will remain opportunities for us to grab, especially, for instance, things like pharmaceuticals. Whenever they put out policies which actually makes no sense whatsoever, they talk about price cuts and so on and so forth. And markets tend to react maybe irrationally at times, or market men react irrationally. So those opportunities can be taken. And I would say that, watch out for sharp dips to buy into. Markets may not be that forthcoming, but if you have to look at two things to figure out if the trend has changed, I think it's the US yield and the dollar index. The dollar index tested 98, came back to about 101.5, 102. Now it's gone below 900 again. It's probably close to 99.5 and may retest 98. The dollar yield, the index, the market moves are clearly linked to a weakness in the dollar and positively correlated to a dollar weakness. And the bigger problem from a US perspective are yields. And I'm hoping that some solution, because any country that has 37 trillion in debt and the long bonds trading at 5%, give or take, is in deep trouble. But that also happens to be the country that can print notes and be the standard currency. And that paradox somewhere along the line is getting sort of unwound as money moves into gold, money moves into the Swiss franc, the euro, and safe haven like that.
No, okay, you talked about pharma. Jakes, and I'm interested in that because I think that turnaround has been seen, that understanding has sort of come in that perhaps investors were quick to jump the gun, thinking that one day Trump will say most favored nation policy for pharma, our prices will mirror the cheapest in the world, and then everything will sort of blow apart. Do you think that there is a distinction to be made here between companies which are selling largely generics, CDMOs, and how do you sort of navigate as an investor the pharma space?
I think the real problem from a Trump perspective of the US consumer perspective is the pricing of some of the patented drugs and the sort of unholy alliance that exists between the middlemen, 2 or 3 large groups distributing the bulk of pharma in the US, especially generics. So typically, if a generics lands in the US on US shores at $1, it gets retailed at $5, where the patented equivalent could be between $10 and $15. Now, because the patented equivalent is $10 to $15, it could be maybe $10 or $12 in Europe, but 12 to 15 in the US. The middlemen actually make a huge spread between that by marking up the $1 to $5. And I think if that system were to be eliminated, the demand for generics would dramatically move up. And more importantly, the patented folks would actually bring down their prices. So prices have to come down with competition, not with diktat. Prices have to come down with more, getting lowest cost producers a chance to get their products across to consumers in the cheapest possible way, not by talking down prices. And that the exponent of free markets, the US, needs to probably understand, and I think they do, but a certain few who make policies, I don't think quite get it, that they believe they can bluster their way through by actually talking prices down, which is not going to happen.
That's not going to happen, and I think that agreement is something that is absolutely crucial.
And the last point here,
yes.
the last point, if you will, is that the US actually needs more, not less generics. And Indian pharma is more generics than anywhere else in the world. And I think that is therein lies the rub, that you need Indian pharma, and yet you're sort of peeved about the fact that Indian tariffs have been high, and you're mixing issues here. So this needs to be sector specific. This can't be a one tariff fits all kind of strategy, which is attempted to be put in place right now.
Absolutely, and the doctor of medicines is what India is called for the US as well, taking into consideration the kind of generic exports that happen from here on. But thank you, Jake, so much for joining us on the show and sharing the views.